Is the housing market softening? Is the real estate market cooling off? Those are the questions I've heard most frequently over the last several weeks. So we're going to take a look at things and I'll tell you exactly what's what. Welcome to our real estate market update for September 2021. I'm Erik Braceland with Braceland Homes here in sunny San Diego, California, where we guarantee the sale and or purchase of your home. In the unlikely event we can't sell it, we'll just buy your home from you ourselves. Here on the Braceland Homes channel, we cover topics relating to buying and selling residential real estate. Please consider subscribing to our channel if you like this video, so you can be notified of future content as I produce it. Probably the biggest news in real estate right now is the drop in pending home sales. It's all over the news, and certainly you're seeing that. So let's talk a little bit about that and see if the housing market is really starting to cool off. We've seen the headlines out there and we talked about it last month, but let's look at pending home sales going all the way back to 2012. You can see right here, we were clipping along there at a nice pace through 2019 and 2020 with pending home sales, and then we dipped down during the lockdown, come back up and pack a bunch of activity, a bunch of home sales in the summer of last year. A little slowdown over the winter, and then another strong spring showing for 2021. And then the most recent cool down over the last several months, shown by that little red arrow all the way to the right of your screen. You see that drop, still well ahead of where we have been historically, but off the highs of what we saw over the summer last year, and coming into the spring of this year. So yes, things appear to be cooling slightly, but I want to give you some more context about where we stand. You know, if you look at the white dashed line, that will give you perspective of what a healthy housing market looks like. As you can see, we are well above that. It's still a very, very good market right now, and this visual starts to put that current drop in pending home sales into perspective. Even with the current cooling trend, the market is still well above where it has been at any other time in the last decade. Not so bad for you home sellers. I'll go to a quote here from Odetta Cushy. She says, "We are seeing some signs of softening in the housing market, but context is important here. We're still very much in a seller's market. We're seeing some early signs of softening." So what we want to do here is focus on what I have there underlined in blue. Context is very, very important. Just like we looked at existing home sales, we want to look at everything. We looked at the last 10 years of pending home sales and we see this drop. It puts that in context. So let's go through and look at a couple other things. And let's focus on the context of what's happening. First, let's look at the number of home showings over the last couple of years. You've seen this before if you're following my updates, but it's a good indicator of market activity. This also indicates a cooling trend in the housing market. You see the two red bars there during the lockdown last year in May, March, and April. And then things came back, packed a lot of business in the summer. Then we saw a tremendous amount of home showings as we started this year off, but we have started to dip down. Now again, for some context, just look at the numbers of showings for June and July of 2020, and then those of June and July of 2021. They're very, very close. If we go back to July of 2019 for even more context, we discover that there were much fewer showings then. Again, context, very, very important. Well, it's true there are less showings than a few months ago. It's also true that that's only really the case because of the extremely high traffic during those months. So we've looked at pending home sales and home showings so far. Let's take a look at something else about list price to sales price of homes that references the housing market cooling. Ojo Labs released this. They said, "The US housing market continues to be ultra competitive, even as new COVID cases surged. But new data shows the level of competition and ensuing price increases may be cooling off just slightly. Data shows that 49.6% of homes sold for more than initial list price in July, far ahead of the number reported in July of 2020, when 26.8% of homes were sold above initial asking, but below June's total, when 54.4% of homes were sold more than the initially listed." So this is a quote that I had to read several times before I understood it. Here's a visual of what the quote says. I hope it helps you like it helped me, but if not, it simply says, "The percentage of homes that sold over asking price decreased less than 1% from June to July." So there's your big market cool down there, or what they were saying may be cooling slightly. Only 1 out of 2 of the homes sold over at list price. It's still a very, very robust market. We're seeing some of these slight signs of cooling, but 1 out of 2 homes selling over list price certainly is not what I would consider a cooling market. Now, if we want to talk about why we're in the market we're in, we have some graphs that I want to share with you that'll help sort of lay this out. I want to start here with new home listings each month. If we look back, going all the way back to 2017, I'm going to focus first on 2020 and then we'll contrast that to 2021. So if you look at 17, 18, 19, kind of follow the same curve, sometime around May, start to peak with the new spring listings coming in the market. And then they start to go down and further dip in October, November, and December. That's what an average year looks like for listings. We start out slowly, kind of bell curve shape, peaking around May, then tailing off. Well, you see there on the orange bar what happened in 2020. We started off on that normal pace and then we dropped down during the lockdown. People pulled listings from the market, and once the lockdown was lifted, sellers started to bring those listings back. But here's the key that I want you to look at. You can just see it visually. When listings started coming back to market last year, we never hit the historical number that we'd seen in 17, 18, and 19. We were shy of that. And you can see that there, where we kind of hover there below and then tail off at the end of the year. Folks started putting their homes on the market towards the end of the year. But we never saw the volume or count coming to market like we had seen in the past. And there are a lot of reasons for that. There were folks that said, you know what, I feel concerned. Life is uncertain. I'm uncertain about the health outlook. I don't want to bring a bunch of people into my home. A lot of very valid concerns. We just didn't see the listings coming to market. So that's been the cause of a lot of issues we've seen in real estate and the super low inventory. Now let's look at what's happened this year, because it gets interesting here. We lay in 2021 and you see there that green bar. We're starting to come up, but again, very shy of where we've been historically in listings, and then kind of continuing to rise through that May time period when we would normally start to fall off. Then things flatten out through June and July. Now, what's the moral of the story here? Well, if those listings start to fall, then we're going to see more pressure, upward pressure on home prices because of low inventory. If those listings start to climb and get in line with what we've seen in previous years, then we should see less robust price appreciation on homes. So we're going to continue to watch that, and I'll bring that in the future market updates along with other things that we bring you on a regular basis. But that's one thing we want to watch. We want to watch listings and if they're coming back to market. You know, when we talk about a cooling market, we don't have a buyer issue in today's market. We have a seller issue. More sellers bring more inventory back to market. Here's what Danielle Hale from Realtor.com said. If these changing inventory dynamics continue, we can see a wave of real estate activity heading into the latter part of the year. So if sellers continue to bring back listings, we could see a wave of real estate activity heading into the fall. So all that's going to be dependent on those that put their homes on the market. And that will largely be dictated by the path of the coronavirus. So what's happening there? So a lot to watch right there, but this gives you a breakdown of what we're seeing relative to the overall real estate market and what's happening with buyers as well as what sellers are doing right now. Just want to take a quick break here to thank you for tuning in and taking the time to watch. While I honestly prefer you don't give me a negative response, I would like to know if you find this information helpful, because I do spend a lot of hours researching and producing this content for you. So please hit that like button. All right, we'll talk about housing affordability next. And this is a real concern. As people are watching home prices rise today, they're saying homes just aren't as affordable anymore. And what I want to do now is give you some context and clarity to ease those fears if you are a home buyer. Now, it's no surprise that the people have these concerns as they're looking at data like this. This is the monthly mortgage payment. It shows how it's increasing significantly over the past few months. This goes all the way back to April 2020, where we can see those orange bars kind of humming along. And then all of a sudden, March, April, May, June, all of this year, that monthly mortgage payment is starting to rise. And that is a direct reflection of all the home price appreciation. Now, when we look at this contextually, We can see that the rising mortgage payment is contributing to a decrease in affordability. If you are new to our discussion, the higher the bar, the more affordable homes are. If you've been following along with us, you know that concept. And in January, it was much more affordable to buy a home than it is in the last few months. We can see that affordability decreasing. So saying that homes aren't as affordable as they were a few months ago, that's not up for debate. That is real. That is what the data is saying. And it's starting to spark this fear for those of you maybe sitting on the sidelines watching this. I know there's a lot going on in this graph, but try to stay with me. I promise there is some good news here, and I'll put things in context for you. This is the Housing Affordability Index from 1990 all the way to today. Now, what we can see here is that the blue bar over on the right shows that the homes simply aren't as affordable as they were even over the past few years. And a lot of times what people think of when they say homes just aren't as affordable anymore is they think of that housing bubble bursting. Those are the orange bars. Are homes as affordable as they were back then when distressed properties dominated the market? No, they're not. But as we look at this chart, we can see that homes are much more affordable today than they were at any point leading up to the housing crisis. Now, these index numbers take into consideration wages, prices, and mortgage rates. So all of those factors combined, we can see that homes are still affordable today. But you're not going to get that deal that your neighbors or your friends maybe got a few months ago. So that's the price appreciation starting to play into affordability. Now, where this becomes a real concern is for you renters who are sitting on the sidelines. So if you may have seen this graph before as well, this is median asking rent going all the way back to 1988. And it is continuing to climb year after year. And it is truly skyrocketing over the past few years. You may be sitting here saying, I'm seeing home price appreciation start to really climb. I can't afford to buy a home. I'm not ready to jump into home ownership. What I want to do is help you understand that rent prices are rising even more rapidly than home prices. You're also not building any equity in a home while you rent. Instead, you're building your landlord's equity. Renting is creating a real long-term financial challenge for those of you who are waiting to buy and continuing to rent. Now, here's another reason why you renters may be sitting on the sidelines and waiting. And that's because the percentage of income needed for a mortgage payment is also increasing right now. Again, a reflection on price appreciation. We can see in this red section that the percentage of monthly income that it takes to purchase a home is now climbing at an even faster rate. It's really kind of jumping up. But let's also remember that even if it's at 17.1% of monthly income right now, it's still well below the historical norm of 21.2%. So again, context really helps shape this picture for anyone that might be waiting to buy a home. This is a telling graphic that puts affordability quickly into perspective. On the right, we see the current percentage of gross income, that's before taxes are taken out, needed to pay a mortgage on a house. That's where the market is right now if you are looking to buy. Not as awesome as it was a few months ago, but still below the norm. The middle illustrates this norm, or historical average, we also just talked about. And the column all the way to the right shows what the National Association of Realtors recommends as the maximum percentage of gross monthly income you should be paying towards a mortgage as 25% to keep it manageable. And just for reference, most mortgage lenders are a little less conservative than NAR and agree that you should spend no more than 28% of your gross monthly income on a mortgage payment. And that includes principal, interest, taxes, and insurance, or PITI. So the 25 to 30% on the far left is what we want to be below, and we are. So what does all that mean to those of you looking to buy? Simply put, homes are less affordable, but not unaffordable. So stay positive and focused on your goals of home ownership. If you'll allow me to digress for just a moment, I'd like to ask you to please subscribe to our channel and hit the bell icon so you can be notified of future updates and other related content. Let me know if you are enjoying these insights and hit that like button. Any questions on this? Just enter them into the comments section below, which is down there below the viewing window. All right, let's get back to our update. So, are we heading into a more normal market? I know. Spoiler alert here with my heading on this graphic, but let's break this down. The Merriam-Webster dictionary says normal is conforming to a type, standard, or regular pattern characterized by that which is considered unusual, typical, or routine. I want to unpack a few things in the market today relative to that. First topic that I want to talk about is mortgage rates. If you think about mortgage rates, that's what's really fueled the demand for homes over the past year. No doubt the meaning of homes has changed, but we saw earlier we didn't get the listing inventory that we needed, and then rates fell. If you start to look at rates by decades, 70s, 80s, 90s, 2000s, 2010, we see what we would maybe call more normal rates. Certainly an interest rate in the sixes, maybe in the fours. Fours are even low by historical standard. But you go back to the 70s or 80s, 8% was not considered a very high rate. You go back to some of the highs back in the inflationary times, plus 10%, 15%, whatever the case may be. Look at today, we sit at 2.87 on the average 30-year fixed. So a lot of instability in the world. Some of the issues with the job market right now are all giving us lower rates for longer. Lower for longer in the mortgage rate area, so that's very good. We certainly wouldn't say that's representative of a normal market by historical standards. Next thing I want to look at is home price appreciation. Are we heading into a more normal market with the home price appreciation? If you look at home price appreciation by the year, most recently right here, according to this Black Knight study, 14% home price appreciation. And you're seeing higher numbers come out of Case-Shiller and some other places, up to even 17%. We've talked about those, but a lot of appreciation in homes. And you see the red bars there in the middle. Those are the years that housing prices saw depreciation on the market. And we know right now the average appreciation, you see it there represented by the orange bar there in the middle, is 4.1%. Now it's interesting, the average appreciation forever we talked about was 3.8%. The last couple of years of strong 10 plus percent appreciation has raised that to 4.1%. After seeing this, is there anybody out there that would say our current home price appreciation is normal? No. We're seeing very, very robust appreciation across the country. Number 3, supply of inventory has been the biggest issue in housing, no doubt, over the last year. Let's look at where we're at in that right now. NAR says this: month supply refers to the number of months it would take for the current inventory of homes on the market to sell given the current sales pace. Historically, 6 months of supply is associated with moderate price appreciation, and a lower level of month supply tends to push prices up more rapidly. So 10 homes on the market, we sell 1 home a month, we have 10 months supply. We've been nowhere near that for quite some time. And we see this balanced market typically being between 4 and 6 months of supply. Where do we sit today? 2.6 months of supply in the market. This looks all the way back to 2011, which is 10 years, and you can see that kind of ride down there where we sit in the lack of available inventory across the country. That's anything but normal. We need more homes in the market, like I've talked about before. And this fall market will be dependent upon how many folks put their homes on the market coming up. Number 4, days it takes to sell a home. As of July, well, really all the way back to April, 17 days to sell a home. You go back and just look at this graph going back to March of 2019. You see some of the days there, 42, 49 days at some of the peaks. Think about that, a month and a half to sell a home. That's not an unrealistic time frame, but 17 days, that's a quick time frame to sell a home. And likely that number is shortened. We've all heard of homes selling in a day or two, but those numbers are just how quickly they went under contract. 17 days includes all the I's dotted and T's crossed, so to speak, during the escrow period. But homes are selling very, very quickly. Anything but normal with respect to where we stand with days in the market. Last but not least, we have number of offers per listing. So that's the number of offers that are made on average on homes for sale across the country. Typically, we've seen that range around a couple of offers on the average listing, according to National Association of Realtors. We're at 4.5 right now. Off that peak, there was up to 5 in the spring market this year, but certainly not a normal market relative to the number of offers that are being received on listings. We want to keep that in mind because people say, well, the market may be cooling off. Is this where we're heading into something that's more normal? No. when we look at what's happening in real estate today, it's anything but normal. I want to wrap up here by reiterating that the housing market is not normal right now. There are still unique opportunities for you depending on what you wish to do because of that abnormality, if you will. Home price appreciation forecasts going into 2022 are averaging 5.5% from the Mortgage Bankers Association, Fannie Mae, Freddie Mac, and the National Association of Realtors. I bring this up because many may be saying, hey, home prices are rising too fast for me right now. I'm going to wait until next year when things cool off just a bit. Well, if you're going to wait till next year, it's just going to cost you even more for those of you looking to buy a home. So please keep that in mind. So that's a wrap for this real estate market update for September, and from everyone here at Braceland Homes. Thank you for the time you invested in watching this, and thank you for the time that you spend to be aware of what's happening in our current housing market. You will enjoy a better, more successful experience because of it. If you've enjoyed this content or found it helpful, please hit that like button, consider subscribing, and share this content with someone you like. If you didn't like this video, share it with someone you don't like. I do appreciate your comments, questions, and feedback, so please enter those below so I can address them and so other viewers can benefit from all your input. All the best to you on your real estate adventures. Take care.